Now, the double entry system of accounting or bookkeeping means that every business transaction will involve two accounts or more. For example, when a company borrows money from its bank, the company's cash account will increase, but its liability account in terms of loans payable will also increase. Two accounts are affected. Double entry bookkeeping. If a company pays $1,000 for an advertisement, its cash account will decrease and its account reflecting advertising expenses will increase. That is double entry bookkeeping. Put another way, double entry bookkeeping says that for every debit, there must be a corresponding credit. For every debit, there must be a corresponding credit. So all the journal entries that are processed must have an equal value of debits to credits. I'm going to cheat here a little bit. It's going to help you. But you need to just trust me on this and it will come together in the end. Here are the two golden rules of double entry bookkeeping. They sometimes appear counterintuitive, but they are true. The first rule, when you are looking at the income statement, or specifically if you're looking at revenue and expenses, income is always a credit and expenses are always a debit. Let me repeat that. For income statement transactions, revenue is always a credit and expenses are always a debit. So when you're processing journals relating to income and expenses, remember this. Income is always a credit and expenses are always a debit. A credit is income and a debit is an expense for the income statement. That's the first rule. The second rule relates to the balance sheet, or specifically assets and liabilities. In the balance sheet, an asset is always recorded as a debit to the balance sheet, and a liability is always recorded as a credit to the balance sheet. So if a company receives money in the bank, in the balance sheet, it is always recorded as a debit. That increases the amount in the bank. If a company purchases an asset, this asset is also reflected as a debit in the balance sheet because the company now has more assets. And in the balance sheet, a liability is always reflected as a credit. So if the company owes the bank money due to an overdraft, this will be reflected as a credit in the balance sheet. Or if the company owes money to its suppliers, this will also be reflected as a liability and as a credit in the balance sheet. Hold on to these two golden rules. Even if they seem counterintuitive, you'll get it eventually. To repeat, in the income statement, income or revenue is always a credit. In the income statement, expenses are always a debit. In the balance sheet, assets are always recorded as debits, and in the balance sheet, liabilities are recorded as credits. Two golden rules that will serve you well. Follow these and bookkeeping will be a cruise.